is ripping.
My tummy hurts.
Pretty good, right now.
Hey guys, what's going on? Nick with Off the Chart Trading. I'll be doing tonight's video that will apply for Thursday, the 24th of February. It's already crazy, the month's already almost over. Anyway, what a crazy day, to say the least. I mean, when I went to, I didn't go to sleep pretty late because I wanted to keep up with what was going on in Ukraine. And I think I was until about 1:30, and futures were just getting completely hammered. Actually, I think let's do this. Let me switch. Just go back. Just trying to think of a chart set up. I'm looking at my smaller time frame to see if it's better to kind of just show this example, because sometimes the higher time frames don't really do it justice. There's a lot going on with that one, so I'll just keep it on the daily, and I guess I'll just make that maximize sell. So, very similar day to on was it 124, January 24th. We had that speculation after almost a full week of just selling. People couldn't take it anymore, and what do? We rallied and went green. And a very similar pattern today, where we got down to about 4,100 or so, and then ended up reversing. And we can take a look at the NQ because that is a very similar pattern. I think the NQ had like an 800 or 850 point move. It was just absolutely crazy. You can see very similar candle and similar pattern as far as the range is concerned. But I mean, it's good that it happened, and we can look at my internal screen in a second to see that it was basically just straight up from the bell. I wasn't too surprised. I was surprised that we went from being down 350 points to being up like 400 points, or at the lows I think we were down 380, 400, whatever it was, and then going all the way up and being up 300. It's just a crazy day. And I think Brett shared I guess you can say a fun fact, that this is only when you open up down about 2%, and then finish green on the day. I don't know what the percent after that was as far as the difference, but apparently it's only happened 3 times in history. Today, I think it was 2002 and then 2008, which I didn't look at those charts and cross-reference those dates, but I think 2002 is when we came out of the dot-com boom, like as far as when the selling, like I said, I don't remember the exact date, but I'm just going by those years and how significant those were. I'm pretty sure that's when the bubble or crash or whatever you want to call it that happened in the late 90s, early 2000s. I think 2002 is when it started going back up. And the other time I think it was September or November of 2018. I shouldn't say 2018, 2008. So obviously when you hear 2008, you just think of the, the recession we went through with the housing and stuff like that. I think it was still actually bad in 08 and 09, and really didn't end up panning back up till I think ended 2010, 2011. But my point as far as those extreme moves, it's only happened 3 times. I didn't cross-reference it, but obviously I'm pretty sure he's accurate with that information. So I thought that was kind of a crazy move. And one thing to keep in mind too, you'll see some of the most bullish days during bearish markets. So whether it's a mass pile of short covering, new money coming in, you have all that, and especially after a market's completely overbought or oversold, you'll have those reversals. It's more noticeable on we use this with this setup with the ATRs and stuff. It's basically each one is 1 ATR, 2 ATR, and 3 ATR, and basically almost to the exact level at the end there, coming down to a 3 ATR on the daily, which you can kind of see every time that typically happens. You do at least see a bounce, or it doesn't bleed lower. So something to keep in mind, we did go from the 3 to the 1, which is a fairly significant move in one day. So we'll have to see, do we end up coming back to the mean and then falling back down? Do we end up starting to leg back up here? It's it's kind of early to tell. But granted, futures are getting hit a little hard after hours here. The NQ is down about 105, ES is down about 25, and the Dow's down about 163. So not the most bullish continuation, but considering the move we had, I think a little bit of selling, I don't think it's too crazy. But we'll just have to see if this, to me, it doesn't really mean much if there's no follow through. It was nice to have that massive swing. You know, you 9:30 ding ding ding, and you're like, oh man, that hurts as far as your account's concerned. And then to go from what you were down to finish being green on the day is just kind of a crazy, just a crazy day. There's nothing really else to say about it. So, I mean, we still are below the 8, that purple line right there. So I would want to see tomorrow to at least close above the 8 and potentially go up to the 21. Maybe getting back up to a little past 14,000 there. And then see how it plays out, day by day. You don't want to trust it. You don't want to be all bullish today. I mean, like I said, it was a solid day, but we can go by this day too. Wow, that was a great reversal, crazy, but never seen before, yada, yada, yada. And, next day we're back down a little bit, consolidation. We do break higher, and then what happens? We end up having new lows. So who's to say we don't do something similar? We do come up to the 21, trade sideways, and then have new lows. Once again, that symmetry where you can see from here to here, from here to here. You can kind of, after you do this for a while, you can almost just visualize it. Now, there's ways with Fibonacci to actually get the symmetry and the timing and all that kind of stuff. But you can see, 15 candles down, maybe not as much, but pretty darn close that you see that symmetry where you might have 3 or 4 days of up and then continuation down. So definitely a bullish day overall, but one day does not make a market, especially when you're looking at higher time frames like a weekly, a monthly, and a daily. So definitely a great reversal. That weekly candle looks pretty good, but once again, we've had some pretty good weekly candles and then they end up giving out. So we'll just have to see how it holds. That 13,000 seems to have held for now, and like I said, we'll just have to just wait and see. The laggard today, funny enough, was actually the Dow. Obviously you can see through the weekly and even the daily, similar, but it just seemed to lag where the NQ was up on the day, I think at one point like 50 points, and the Dow was still down like 600 points on the future. So I thought that was quite interesting. Normally the Dow's been fairly strong. The Russell was also really strong today as well. One thing I will say is, and probably because it's been hit the hardest, if you look at these weeklies, it's not as aggressive. We came right there to that same level again. I don't know if we technically, I'm sure we did, but was it by much? Yeah, not by much. We did take it out, and the squeeze is still not fired. The other one seemed to have fired short, but momentum shift over the last 5 days, but we'll have to see, or I should say 4 days. This is technically after hours. The momentum is shifting down, so you would think if it continues, it'll go to red and then potentially fire short, but you don't want to jump the gun with this. Like I said, that weekly did end up firing. Almost every video we talk about that. And then here we are 4 weeks in to that continuation of that squeeze. And then technically, if you use the regular squeeze, we're 6 weeks in. And, my rule of thumb, it's about anywhere between 6 to 8 weeks at the most that this momentum will fire short. It doesn't mean we don't go lower, but it's just something to pay attention to, that the even though the Russell's been hit the hardest, it is holding up quite well, all things considered. So we'll just have to see how that plays out. That's basically it for the indexes. I honestly didn't really do. I didn't take a singles futures trade. It was more just, I guess, observing most of the day. I did end up taking, I wouldn't even say a trade. I added to one position. And it stinks because, right out of the gate, we ended up having that pop, and then boom, we respected the entire day after that. Which was just crazy. And I did want to wait for that first 15-minute shakeout, because sometimes you'll get that pop of shorts covering, you go long, and then you get that flush. And I didn't want to get trapped short. I didn't want to go long and then get trapped, and then we end up taking out the lows of the day and continue down, because I don't want to say common sense, but, a rule of reason would be that, after all this going on, you got the Fed, you got inflation, you got fear all over the world. Now you got it goes from a rumor or, imminent invasion in the next 24 to 48 hours. They'd say that for 2 weeks straight, and then it happens. And I think that's actually part of the reason why we ended up rallying, is obviously not the invasion itself, but it's no longer, it's no longer a known event. They've done it. And that's something that most people don't realize on how the market is, because we talked about in the morning, it's like, why is the market rallying? It's like, well, it's no longer, an unknown event. It happened, and it's no longer, a rumor. You hear the rumor, buy the rumor, sell the news. And it's something similar to that, but just the reversal now, because ultimately, people are buying it because it's no longer an unknown event. So sometimes that happens, and then when you're already going into something like this and you're oversold, And, and I don't care what you use, an RSI, any of the stuff that we just looked at on those other things, like the Keltner channels, Bollinger Bands, whatever time frame, I mean, there's no, I always say there's no true definition of overbought or oversold. It's all depending on the individual. That's, I guess like an art, kind of just saying, oh, I see this or I see that or whatever. It's almost like abstract art when it comes to, using that type of, I guess, wording. Because I don't personally think there is an actual definition of overbought or oversold. But when you use, 5, 6, 7 different indicators and they all kind of say, yeah, we're kind of oversold here. And then you have that pukage overnight in the futures. You never want to ask yourself how much lower can it go, because it can always go lower, and vice versa. How much higher can it go? It can always go higher. So you never really want to use that, but there are extremes and there are ebbs and flows in the market. And it's good to be aware of that, because I think some people went short heavy this morning saying, all right, I can't either. They were like on the wrong side of the trades over the last couple weeks, couple months, and they're like, I'm just done with it. This market's going to pull back now. And they go heavy short, and then they get rip your face off rally, end up getting destroyed. And that's the worst thing. You never want to be caught where you're getting beat up on the long side. You're getting beat up on the long side, and you finally say, I can't take it anymore, and you go short. Typically, when you hit that mental break, that's when the markets will end up going higher. So I made a comment almost right out of the gate saying, I wouldn't surprise me if we end up going a little higher here. But I'd probably wait the at least bare minimum, that 15-minute candle, realistically the 30-minute. And then I think it was about an hour in or so. So yeah, about 10, 15. This candle was like, that's not a very good looking candle. Maybe we are going to pull back. And then sure enough, it'd get a little lower. And then it was just off to the races after that. So like I said, a pretty strong reversal. Apparently it's only happened 3 times in the S&P over the last 40 years. So obviously when you hear statistics like that, how many days there are in a year and how over 40 years, saying it's only happened 3 times, like I said, those are significant events. Is it a one-off event? Are we going to see continuation? And that's the main thing. It's like, it's almost like a hurry up and wait. Like, all right, it's like 3 strikes, but it's the opposite. It's like a good thing. Like, all right, cool. First strike, boom. We had a good reversal. We want another one as far as being able to see if there is continuation higher. And like I said, looking at that other chart on the daily, most of these indexes are below their 8 on the daily. That would be where I would be looking for potential, like, okay, maybe there's a little more follow through to this. And obviously with market profile and some other, nuanced stuff, we can take a look and try to find certain levels and stuff. But when the markets are this volatile, I personally don't try to put too much weight into exact levels. Like I said, I kind of just step back and I'm more of an observer of what the market's doing. And even I was kind of caught. I made a joke, I wouldn't be surprised if we go green on the day. But, after Biden spoke, it just continued, even though I don't think he really said anything. Once again, it's, we're not going to war. We're going to deploy, I think there's like 7,000 troops to different NATO regions and stuff. But nothing like, this is an act of war and stuff like that. And since none of that was said, that's considered bullish. And what happened? We got more buying halfway through the day. So, because I think he ended up coming on around 130, 145, somewhere in that. And like I said, you can just see it in the chart after that. It was just straight up. And then probably more short covering. And then obviously there's a lot of money on the sidelines too. So that's something to keep in mind, that, money can't sit idle. When people, work at Goldman Sachs and all these big, Merrill Lynch and stuff, they can't just put their clients' money to the sidelines. So there's a lot of money waiting to be deployed. Some of that was probably today. I didn't honestly look at the amount of volume, but I guarantee it was a crazy day as far as volume is concerned. Something else to keep in mind, put-call ratio is still very high. I think we opened up at 1.13, 1.14, something along those lines. What is the... You're not going to do it? Let's see. Yeah. 10-day moving average is about, let's round up and say about 0.9. So overall, think of a scale. A lot of people are bearish to this market, and just like anything, it's not sustainable. So the higher that number goes, more people are leaning, and typically, obviously, the scale becomes unbalanced. So typically when you see above 1.0, that's like an extreme. Think of like a car with the RPMs, like it's in the red, kind of tapping, like you're at like 8 and 9 and stuff. I look at the put call like that. Not that it can't handle a little more, maybe go to 10 or whatever the case may be, but it's just something to be aware of, that it's not sustainable. And whether it's the next day or sometime early next week, you typically will see a big pop and some potential follow through. So we'll just have to see how that plays out. Also, something that was helping was the drop, even though it reversed a good amount throughout the day, having the 10-year drop a little bit was also pretty good. I think that helped the tech stocks move back up. Oil got up to 100 and then dropped, I think, as low as 92 after, once again, after, I mean, it was already kind of selling off since the beginning of the day, probably profit taking because it's had such a wild ride. And then obviously off the backs of his comments, like I said, when he talked, yeah, it was right around two. I don't remember exactly specifically what he said, but obviously something along those lines of oil dependence and so forth. And that didn't help the case of oil, which obviously, unless you're driving an EV, you definitely want gas prices to be lower. I mean, heck, travel, anything, you ultimately, it's not good. And the other thing is too, when oil, what is it? I forgot the probability if oil does go back above $100 a barrel, the chances of a recession are very, very high. So once I saw it get to like 98, 99, I'm like, And you know, like I said, it's just one data point. You never want to be like, oh, that's it. We're going to be in a recession in 6 months because of oil. But it's just little things like, hey, every time this has happened, there's been this. Like, just something to be aware of. But anyway, that was interesting to see oil and also gold. Kind of almost, you can copy and paste this chart and lay it over each other, and it's very similar. I was shocked to see gold. I don't know, just finally gold did something, you know. Obviously members know I'm salty about gold because everything that's been going on the last like 2 years, I kind of anticipated happening, and gold didn't do anything for a year. All of basically from the end of 2020 going into almost the entire year of 2021, gold didn't do anything. And obviously with geopolitical issues and this and inflation, finally it decided to go up a little bit, but it's come back down a bit now, coming up a little after hours. The dollar shot up crazy and actually ended up hitting a 52-week high at 97.73 there. So it's kind of a double-edged sword. Strong dollar will fight inflation, but at the same time, it's typically not good for our equities. So pick your poison in that sense. Bitcoin got hit real hard, got on below 35,000, and then into the end of the day had a nice spike higher. I decided to finally pull the trigger. I bought some more, was it Solana and Ethereum, basically the only two that I would really care about. So I did end up buying a little bit, not much, I think yesterday night. Funny enough, I did it, was it yesterday or the day before? I'm pretty sure it was yesterday. I mean, obviously like 2 hours later, they're going to war or whatever the case may be, and the price dropped even more, but that's just typically how it goes. You know, jokingly, it's always a buy signal a little after I either get out or a sell signal when I'm getting in. But that's basically it as far as what we're looking at here. We can look at my ETF screen. What screen would that be? I think 3? Yeah. One thing that caught my attention, that if you thought that there would be, you know, typically the flight to safety is utilities and staples, and they both gapped down and trended down for most part of the day until kind of with everything else started heading back up. But you can see that tech was very strong and retail was very strong, and XLK, which is also tech, was strong, and you know the financials gapped down, were down pretty bad, and then ended up climbing up. So I mean, it was pretty broad as far as that same type of pattern where you either had that gap down, sideways action to down, and then halfway through the day ended up climbing back higher. So most stocks ended up in most sectors kind of copied each other as far as that. But that was something to pay attention to too. If people were really worried, then you would think it'd be the opposite, that these would either gap up or at least be sideways and start climbing up. So that was another thing that caught my attention, that staples and utilities, which are typically where when money leaves all of these, they go into these two during uncertain times and stuff like that. So staples, and you could either, you know, you could play Walmart or any of the specific ones in there. I don't know why, but Coca-Cola and Pepsi is considered a staple. But, you know, you can play the specific names in those, or you can play the sectors themselves and just get XLP calls, XLU calls, or find specific ones in them. Like I normally do NEE or Duke. Typically I'll play those, but if it's more of a broad idea, then I'll play the Spider ETFs for the sectors, just so I don't have to, because sometimes that sinks is, you know, you might go long Duke and they get a short report, or they end up buying a company or whatever, and they drop over the next couple of days, but NEE and all these other ones end up going higher. Sometimes it's safer playing the ETFs, because, you know, you might cap some of the potential profits because it's moving slower, but it's also on the flip side safer to do that as well. But everything, like I said, kind of the same scenario in all these sectors is that gap, sideways action down, and then halfway through the day ended up climbing back pretty aggressively. So that's also what you want to see too, is broad-based buying. It's not, rotation, because if you had 4 or 5 green and the rest were red, then obviously money's leaving one thing and going the other. But when you see, just using my candles, and your eyes should be able to catch that, you see green, 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 everything's green. That's just showing broad-based buying. Like I said, the only thing I did today was literally buy one thing. I tried to get more, and I'll just show those 2 stocks. I tried to get more PAP today at the lows. It got down to 28.80, which was the all-time low. I think it was 28.90 something when I tried to put the order in, and I put the order in at 28.90. It was like 9:32, 9:30. It was right after the bell, whatever it was. And sure enough, it was only down there for a couple seconds, popped up, and it never looked back. So it was almost, like a $4 move. So I missed that, trying to nibble on shares of that, because my average is still like $48 on this one. So I'm trying to get that down, because, you like a stock and it goes up to 90 and you're like, oh man, it's 30%, 40% off. That's such a steal. And then here we are at the, all-time lows this morning. Has earnings coming up too. And it did actually technically have that squeeze fire. Yeah, I guess that would be considered long, since it's above the zero line, but it's not the cleanest setup. The other one I was trying to get, which I think I talked about either on Tuesday or last week, is A-Firm. I started finally buying this. My average now, I think, is in the high, it's 39 something or low 40s. This is another one. I tried to buy it once it got to 32.29. Once again, all-time low. I put an order in at 32.50 when it was back at like 32.70. Never got filled. And look at it. Went up to $6 move today. So it happens. We'll just have to see. Obviously, if you're making investment ideas or longer term ideas, you really can't make one candle. But that's the thing I always say. You don't know. Is this the all-time low? And then from now we trade sideways to up and you miss that opportunity. That's why you never want to do a full position size and start averaging down when it gives you the ability. If you're really bullish, there's something wrong with buying shares here. It's just, I have a thing about averaging down versus averaging up. I'd rather obviously keep my average as low as possible, and when it gets below that price, that's typically when I would want to buy something. But I liked A-Firm. I missed it over here once they got that Amazon news, shot all the way up to about $180, and then here it is free falling down to the low 30s. So I think that's a pretty good pickup. If you're not familiar, basically A-Firm has deals with almost every single major company, and I think that's going to be big. Is the buy now, pay later. So you're basically, I think it's interest free for the first 4 payments, but if you do like a year or 2 or whatever, they end up tacking on a small fee. Amazon gets some money, A-Firm gets some money, and I think that model, as they get bigger clients, will do well. I also think it's a good gauge to see how people are doing, and if this company progressively does well and they have more customers, that's people adding more debt. And I think that might be a good way of gauging how the average person's doing. If their numbers end up doing really well, and month over month, year over year, we're seeing more people do, they're buying it now, but they're paying later. God forbid those people lose their job, technology replaces them, whatever the case may be, and they have all these balances. Obviously, the stock would get hit really hard. But as far as a macro view of the economy going down to a specific, they're buying it from Amazon or the Peloton. I mean, they have their partners with everybody. Anyway, I think it's a pretty solid company at these prices. And on top of that, one to keep an eye on, because I think the better they do over time, the more worried I would be. Like, oh, we've grown 80%. Like, that's just showing more people would rather tack on more debt. And, as debt's already hitting highest levels ever, just something to be aware of. But the only thing I bought today, and I try to maybe give you 1 or 2 stocks that maybe you're not familiar with. This is one we played a lot back at the end of 2020 and going into 2021. This is when everything was just going straight up, and we played this one a lot. And I didn't touch it after it got past about $50, and then you just randomly look at your watch list when you're like, holy shoot, holy crap, the Jumia is at $12, $13, and I remember playing it at 50 or 60. So I started nibbling at this one about a month ago when it was about $13. I think I got my average down to 11. Not a crazy amount of shares. I think I have like 300, 325, but figured I would bring this one up. It had earnings. Was it today or yesterday? I can't remember. I think it was yesterday. They weren't horrible. I mean, obviously they missed, but as far as their growth, it was actually pretty decent. So for those that don't know this name, the easiest example I could use is picture Amazon, like what Amazon does, but for Africa. And they're basically the Amazon of Africa. So some people like to look into, I guess, emerging markets, or just, maybe companies that are outside the country that are potentially growing, or could be, progressively bigger, because obviously it's not better, but it's easier to buy Jumia at $8 than it is to buy Amazon at like 3,500. And if they do the same thing, what's it going to take for Amazon to double versus, Jumia to double? So using that, it's easier to buy shares at $8 and think it can get to 16 reasonably versus Amazon going to 7,000. Granted, if they announce a split, I'm pretty sure it'd be pretty quick for them to get up to 5,000 or so, but that's beside the point. But anyway, check out Jumia. Like I said, the business model, the way they've been growing, and everything's pretty good. Nothing necessarily wrong with the stock, other than the fact that I think, we had that bubble that popped the first and second week of February, so just about a year ago, and almost every single major growth stock has had the same exact pattern where they're down 60, 70, 80, even 90%. And after they've been left for dead, that's typically when you want to look. When no one wants it, but it's a good business model, that's typically when you want to buy it. Most people would look at this and be like, oh, I don't want to touch this. But then they'll look at charts like going back in time over here. No one wants it. Oh, man, look, it's a $2 stock. And if they waited not even a year, boom, goes to $70. So now everybody wants it at 70, but nobody wants it at $2. That type of mindset, you have to laugh sometimes. So sometimes you got to kind of push against it and, not do the I can't take it anymore and sell, do the whole paper hands. Or you're looking at a chart like this, be like, I don't want to touch it. It's on the downtrend and blah, blah, blah. Because, yeah, it might go to $6, might go to $5, who knows. But that's the thing, is we don't know. It could get big news tomorrow. It could be bought out by Amazon tomorrow, or some other type of company, or merge, and ends up, the buyout's $20 a share, $18. You just never know. So all you know is that it's an $8 stock, and what they do, and you can take a look at their numbers, and their market cap's not that much. I think it's like $400 million now. So considering how much they're trying to make in sales and what they're doing, I think it's reasonable at these prices, especially if you want exposure in other markets. But anyway, we'll just have to see how it goes tomorrow and into next week. I still recommend either having like ideas like this that are longer term holds, or scalping, day trading, and taking advantage of this volatility, because anything else, you're probably going to get hit pretty hard. So anyway, on that, hopefully it's helpful, and I'll see you guys at the next one. Take care.